Hello guys, hope you're all doing well. I've spoke to a few of you guys, I think it was 8 or 9, about how you're trading, if you're trading, etc. And a few of you guys did say that you're using a demo account right now, which is obviously perfectly fine. Using a demo account at the beginning of your trading career is the best option, to be fair. But I've got a list of pros and cons, and I'm gonna go through all of them and tell you why the cons do end up overweighing the pros at the end of the day. Because trading on a demo is helpful at the beginning, but if you stay on it for too long, it will mess up your trading, if I'm being completely honest, for when you move on to the live account. But if we start off with the first pro, we've got trading without risking any capital. Obviously, you can place any trade you want. Nothing will happen to your money because at the end of the day, you're just using fake money. If you lose a trade, you won't care. If you make money, you won't care. Well, you will care if you make money, but at the end of the day, it's not coming out of the account and coming into your bank account. It is literally just fake money at the end of the day. So I think that is one of the pros because you can try a lot of stuff without actually losing any capital. So what I like to do, to be fair, on a demo, what I used to do is I just call it live back testing. I know there is another word for it, but what I mean by that is I will test my strategy on the live markets instead of replaying the chart going back 2 years ago and back testing it like that. So that is a good pro, to be fair, of using a demo account because I can trade the live markets while testing my strategy without losing any money if I do take a loss. But yeah. Another good thing is you can learn the basics. So you can learn the basics of literally everything to do with trading without, again, losing any money because it is fake money. You can learn about literally every single thing, resistance lines. You can talk about different chart patterns, EMA lines, candlesticks. You can learn everything to do with charts using a demo account, and that will profit you a lot when you do move on to the live account. The strategy does move on to trading without risking any capital because at the end of the day you can trade your strategy, like I said, on the live markets and see what your win percentage is over the month, which I did. A good thing is to log what your win to loss ratio is on a month, so you can test your strategy for a month straight on a demo account and see how many wins you get that month, how many losses you get that month, and how much you're up that month basically. And you've got orders. So with orders, you obviously have buy limit, buy stop, sell limit, sell stop, market execution. It is good that you can also use the demo account to place these types of orders because you can obviously place a buy stop when you're supposed to place a buy limit and stuff like that. So it does also help in that type of sense for you to get used to the different type of orders you can place in the forex markets. And the main reason I would say is platform. So with MetaTrader, I've had a few calls with you guys, and MetaTrader can be confusing for the first people, or if it's your first time going on the app, because all you see when you load on is just a bunch of numbers going blue and red, blue and red, blue and red. Then you got trade history, account on the bottoms, chart at the bottom. So you do get confused. So it is kind of more comfortable for you to go through the app using the demo account, because if you do accidentally place a trade, then obviously it doesn't matter. Same as if you want to practice placing buys and sells market execution, then you can do that without losing money. If you want to place a buy limit, you can do that without losing money. So in that type of sense, it does help you get familiar with the platform for when you do move on to a live account. Those are the main pros in my opinion, but these three are the main cons as well in my opinion. Pain of drawdown. What I mean by that is you will not feel the pain of your demo account going from 50k to 40k. You will not feel the pain because it's not legit money. But if you're on a live account, if your account's gone from 50k to 40k, you've now just lost 20% of the account, and that you will feel that way more trading on your live account than you do with your demo, because at the end of the day you're trading with real money now. You have the opportunity to make money instead of just trading on your demo, which doesn't make any money. Because like I said, if you're on a demo, your account goes from, let's just say 10,000 to, sorry for the writing, but to 9,000, you are not going to care because the £1,000 difference doesn't make a difference to you, if you understand what I'm saying, because it is literally just fake money at the end of the day. But if you've got 10k, if you've got a 10k account and then it drops down to 9k, you're obviously down 10% right now. And you'll obviously feel that way more because you're down £1,000 in total. And for you to now get back up to your original, you have to make 10% before you start making profits again. That is one of the biggest reasons why trading on a demo account is a con. And also emotions is a big con, because same with this, it's literally your emotions will then get in the way of you trading. If you see a down 10%, you'll start taking stupid trades left, right and center. You'll start seeing the price pump, you'll think, fuck it, it's gonna drop, let me quickly place a sell. You'll just start doing dumb stuff because it's your first time trading with real money, and then next thing you know, 10,000 to 9,000, then that 9,000, let's just say, is 5,000, yeah. So trading on the live account does give you the pros of playing with your emotions, feeling the pain of your drawdown, which are two big things in trading, because if you can't feel the pain of your account dropping, you will never learn to not obviously take certain trades. But on a demo account, you won't feel the pain, so you will take whatever trade you see and whatever trade you want. Same with emotions. You will not feel the pain losing 50% of your account on a demo, but if you were using a live account, you would feel the pain losing £5,000, and I think everyone would. It's your first time trading, you're thinking about making money, and the next thing you know, you're down 50%. Another thing that's kind of outside of this conversation is you guys need to stop looking at the numbers. So if your account's gone from £10,000 to 9,900 instead, you need to see it as a 1% loss, not as minus £100, because minus £100, you're just going to think that's a small amount, but in reality, you're minus 1%, which is, I wouldn't say a huge difference, but is a big difference in the Forex markets. So that's one thing you need to stop doing. You need to stop looking at the account balance and you need to start thinking about the percentages. And another con is increasing your lot sizes. When you move on to the live account, you're going to be comfortable doing what you do on the demo account. So you're going to be scared to increase from risking, let's say 0.5%. You're going to be scared to start risking 1%. And that's going to be a big problem, because then you won't be able to progress in your trade and you'll just be stuck doing the demo account, making small amounts of profits while you're missing out on the bigger profits. But it's because you don't have the confidence to swap from risking your small amount to risking 1%, let's just say. So those are the three cons. And to add on to emotions, you're going to you're not going to be able to learn a lot about FOMO, greed, all of that type of stuff. So with FOMO, it's like if you see a trade 1 or 2 pips off of your entry, you're not going to know about that type of feeling because you're used to trading on a demo account. So you will take that trade because you're thinking, oh, I'm 1 or 2 pips off, imagine it doesn't hit me, and then it just goes straight back down. So you'll end up taking that trade because you'll be scared of missing out on that opportunity, and the next thing you know, that trade hits your stop loss. Then you think, fuck, I've just taken a stupid trade which wasn't necessary. And then that's what I mean by, then more of your emotions will kick in. You'll start getting greedy, you'll want to make your percentage back, so then you'll start taking stupid trades. And then that's why I said your account will go from 10,000 to 9,000, then it will go from 9,000 to 5,000, because you'll just be taking so many stupid trades that will literally decrease your account balance and you won't even realize how fast it will happen. But I think these are the main pros and cons when it comes to trading with a demo account, because emotions do play a big role in trading, as I've said. But these 5 pros are good for you to trade with. Well, not to trade with, but is a good reason for you to trade with the demo account. But I wouldn't recommend staying on the demo account for longer than a month or 2. I would recommend at least depositing £50 to £100 on a live account and just trade with that to get used to trading with your emotions, feeling the pain of losing money, increasing your lot sizes, getting more comfortable. So like I said, if you put £50 in and you go to £45, yeah, so you're down £5 right now, you will not think that's a lot of money, but now you've got to think of it as you're down 10%, yeah, you're down 10% in total right now. So if you were now trading a 10k account, instead of being down £5, you would be down, you'll be down £1,000 in total. So that's kind of how you've got to think it as. Even though it's only £5, it is 10% of your account balance that's literally been thrown into the market, and now you've got to get that account balance back to start making profits. So if you're risking 0.5% of trading, you're down 10%. You've now got to win. It depends what your risk to reward ratio is. If you're doing, let's just say, a 1-to-1, which no one really does, you will have to win 20 trades in a row to gain that £5 back. So you'll have to win 20 trades on the 10k account with no losses to get the 1k back. If obviously you're risking 1-to-5 and you bag that, you'll need roughly about 4 winning trades without any losses. But at the end of the day, you'll still be down 10%. And then if you go into a funded account that's 200k, you'll then be down 20k. And that's the drawdown for funded accounts. 10% is the drawdown, maximum drawdown for all funded accounts. So I do want you guys to start looking at your account balance as a percentage. So you originally started with £50, so you're at 100%. Your account's now gone down to £45, so now you're at 90%. You've got 90% of what you've put in left. And usually your accounts do go bust. I think it's when you're minus 80%. So once this account hits, what is it, £40, I mean £10. Once the account hits £10, then your account will go bust and you'll have to trade micro lot sizes. I would recommend you to trade micro lot sizes anyways, but this was just a little video to kind of sum up my pros and cons, what I believe on a demo account. And I do believe going on a demo account at the beginning is a good thing, but after a month or two, I would recommend you going onto a live account and trading with actual money. But even if it's £50, as I said before, so then you can start trading with your emotions, and you need to start thinking of it, like I said, as a percentage. Stop thinking of it as £50 and you've lost £5. If you've lost £5 on a £50 account, you're down 10%. That's what you need to see it as. Just remember that. You'll be down 10%. But anyways, it was just a quick video to sum up a demo account pros and cons for you guys. And I'll speak to you guys soon. Take care.